All right, we're gonna get started. A very warm welcome and a very good evening. This is your presenter, Mahsin Khan. I'm also the business development manager and one of the lead trainers. So today's discussion is a very, very basic and introductory talk. We're gonna talk about what Nasdaq is, and if you're totally new to this, don't worry at all. I want you all to lay back, take a chill pill, relax, and if there are any doubts, something's missing, it's my responsibility to clear them for you. At the end of the session, we're gonna have even a small Q&A session, and feel free to post your questions. So those who really have some experience, I'm sure you're gonna find value today. You're gonna find value. Now, I have one major responsibility, and it's not only to deliver this presentation and introduce you to what Nasdaq and financial trading is, but it is to ensure that you get value. The reason is because time is more valuable than money. We're living in Kuwait, amazing country, amazing economy. If anybody asked you to buy something, it's easy. But if somebody did really ask you to spend the whole day, 24 hours with them, this is something that will make you think more than twice. So I'm here to deliver value. Okay, so let's get the presentation started. I am sure you can see the presentation in the full screen mode. Let's have a kind of a confirmation. If you want to post in questions section, I believe you can send a message. Just please confirm if you can see the PowerPoint slide. Okay, so let us begin. A very, very small disclaimer. Okay, I'm gonna give you a few seconds. You can even go through it. Please note, I'm not a certified financial advisor, nor am I a licensed professional to give any kind of financial advice. Whatever you're going to discuss in today's presentation, it's only for informational, educational, and demonstration purposes only. How you use the information in this presentation, you're solely liable for that. NCM Academy and its representatives are not accountable in any way. And this was just a quick disclaimer. And these are today's topics. Okay, we're going to talk about what exactly is the Nasdaq. What is the Nasdaq index? What does Nasdaq stand for? And where is Nasdaq actually located? Okay, and we're going to talk very briefly, why should someone trade in financial markets? And what are the requirements for Nasdaq? Why to trade Nasdaq with a fully licensed regulated firm? And how traders make decisions on trading the Nasdaq. Now, first of all, since COVID-19 crisis happened globally around the world, it has forced people to think, in a different way when it comes to business, when it comes to their own personal money and investing, right? And I believe many companies that were even against working remotely from home also accepted that, and it's becoming a really decent practice. Now, financial trading is just like an electronic business. Really, trust me, it's a digital business. If someone ever wanted to start a business today, they need a huge capital, you need location, you need recruitment. Probably, if it's a professional firm, if a potential investor or prospect business person is trying to establish, he might need a professional recruitment consultancy. Then there's purchasing, office expenses, rent, salaries, etc., etc., etc. And let's not forget about the legal part, getting the commercial license, registration. So this kind of process is, of course, it is a risky process. It's not only a risky process, it does consume a lot of time. But in the last 2 years, of course, now there's awareness globally about information related to the financial markets, right? But financial markets, you see, it's an electronic business as well. The best thing about this business or this business model, it's also that it's an electronic business that doesn't require a huge capital, and it doesn't really require to have a physical location. If you have a laptop or a cell phone, this cell phone operates even as your own mobile business. Okay, so why should someone trade financial markets? Usually, generally speaking, it's the people who love to be in the financial markets. They want to taste the financial markets, be in it. It's because people who are willing, they have an attitude of taking financial risks. This is the first category or nature of the people. The second reason why people want to be in the financial markets and trade different instruments like Forex. Usually people say we trade Forex. Forex itself is not something, it's a financial derivative, it's a financial instrument. Okay, so it's for people who are trying to look for multiple sources of income. This is one of the primary reasons. Okay, and it can be even a full-time career, but it can be also taken as a part-time, a means of part-time source of income. Okay, it requires low capital, and the technology that's needed is really basic. All what you need is a delegated internet connection, a cell phone, a computer, and a small working place at home. You know, you can even have a table at the corner of your bedroom or a dining room, and just learn these markets. Not to mention, of course, they are risky, okay, but there are ways to mitigate and minimize risks. Now, what is Nasdaq exactly? What is Nasdaq? Like any stock exchange, okay, Nasdaq uses an index or a collection of stocks that are used to deliver market performance. To make it in a less technical or easy words, Nasdaq actually, it's an index that measures the performance of all the stocks that are listed under it. Most of these stocks are related to technology sectors. Okay, we've got IBM, Google, Amazon, Microsoft, Facebook, etc., etc. Not to mention even Apple and Tesla are also part of the Nasdaq index. All right, a little bit here we're mentioning DGIA here. It stands for Dow Jones Industrial. Okay, it measures this. It measures the performance of 30 big industrial sector in the U.S. The companies that are industrial that offer industrial services. They can be Caterpillar, they can be Visa card, etc., etc. Now the thing is, these companies they exist, or they are under the form of indexes. Why? Because they really contribute heavily to the American economy. Okay. Going further, Nasdaq is a global electronic marketplace for buying and selling securities. And securities can be anything. It can be shares of a company, derivatives, etc. Now, Nasdaq, it was actually created by National Association of Securities Dealers, NASD. Now, recently, a few years back, they were announced as FINRA, Financial Industry Regulatory Authority. So the market was created so that investors could trade securities on a computerized and speedy and transparent system. Because in the old ages, the classical approach was usually the traders, they would be in a physical location within the exchange that are known as trading pits. This is where they would be, all right? And now everything, it's been revolutionized, right? Technology makes things easy. Traders, even the retail traders and corporate traders, they don't really have to be in the pit by themselves. They can do it from their different locations. Our presentation today, it's organized in a very systematic way. Maybe the first part is going to be a little bit slightly boring, maybe very theoretical, but that's how it is. Later in the upcoming slides, it's going to be a little bit more technical. We're going to go into a little bit slight in depth of Nasdaq. We're going to talk about the chart, how it moves, why people prefer trading the Nasdaq, because nowadays the trend is people are focusing more on currencies and gold, etc., other products. But we're going to talk about it, why Nasdaq is also offered by financial brokerages. What's the reason the financial brokers, they have this trading product? So please be patient. If you're already familiar with this stuff, we're going to cover more in the upcoming slides. Okay. So those who are new, they don't know what exactly trading is. In simple words, trading is just an act of buying and selling goods and service. But in the world of financial markets, trading is buying and selling financial securities. There's no actual product. Usually these are all in a digital form. Okay, and let's define investing, because people they take investing in a very different way. But the right way to define is, putting money into financial schemes, and these schemes can be plans just like 401k, your retirement plans. Okay, so putting money in financial schemes, shares, real estate, or a commercial venture. A commercial venture can be an SME, a small medium enterprise, with expectation of achieving profits. This is why people invest, because the ultimate objective is to make profits. In parallel, it is money that you can even afford to lose. The financial professionals or major financial professionals, they do recommend that a person should not invest or risk 10% of their income or 10% of the savings, right? Financial securities, it's a general term that's used to describe stocks, bonds, money markets, and securities. And just like if you want to go shopping for any kind of stuff, right? If you're going to go for grocery and stuff, definitely we'd go to the supermarket. If you want to go shopping in Kuwait, we have Avenues Mall, Marina Mall, and other things. But when it comes to investing and trading the financial markets, there's a specific place, and that kind of market is financial markets. And financial markets, they offer you different kind of products and services. It can be precious metals, gold, silver, copper. It can be even agricultural products, cotton, wheat, cocoa, coffee, corn, sugar. And then there's another category, which is the equity markets, that is shares, just like Tesla, Snapchat. We've got the index markets in the financial markets, Nasdaq, Dow Jones, S&P 500, Russell 2000. Okay, and of course, one of the most even well-known markets, the currency markets, which is forex. So let's take the official definition from the slide. A marketplace where the trading of securities occurs. There are many kinds of financial markets, including but not limited to forex, money, stocks, and bonds markets. Okay, where is Nasdaq? Nasdaq is, first of all, Nasdaq. It's also a market, and its location is based in the American Stock Exchange in New York City, and it is ranked. The ranking system is also very tough globally when it comes to evaluating the stocks and their performances and their indexes. Now here it is mentioned, it is ranked second on the list of stock exchanges by market capitalization. They've got billions of dollars of volume that is traded daily in the form of shares and other securities. So the stock exchanges by market capitalization of shares traded behind the New York Stock Exchange. The exchange platform is owned by the Nasdaq Incorporation. Nasdaq market site, and this is just an address. This is their physical address. If you get a chance, you want to visit it, you can do that. Now, trading Nasdaq, okay, they're very, very basic requirements. First of all, if you want to begin professionally, if you want to have a part-time career or full-time career when it comes to trading the financial securities, you need a decent and a proper trading education. Okay, and Noor NCM Academy, Noor Capital Markets Academy, they do cover this part. Not only need professional education, you need even practical training. You need a strategy. What is strategy? What is a trading strategy? A trading strategy is just like a business plan. It has all the set of rules predefined. A trading strategy dictates or instructs the trader. It has a set of instructions, just like SOPs, when to enter, why to enter, when to exit, how to exit, and what to trade, etc., etc. And of course, once you have the proper training and education and the strategy, what you need more is just discipline and practice. Why? Because experts, those who are into self-development field, they define the definition of success is basically few simple disciplines practiced every day. Okay, and of course, to begin, you would require capital. Let us suppose, even if the capital is not present and it's not there to risk, right? You can open something called a practice account. There are a lot of financial brokerages, including, I forgot to thank in the beginning of the presentation, this webinar is sponsored by NCM Investments, so I'd like to thank them also. for hosting this presentation, facilitating with this presentation. All right. So you should have whenever you decide to practice, it's suggested that you go with a regulated entity. And in the upcoming slides, we'll talk about why you should work with a regulated entity. And you need something called an MT4 trading platform. And of course, a focused mindset. Why do we recommend MT4 trading platforms? Because many financial services companies or financial brokerages, they offer different trading platforms, and most often these trading platforms are not free. Either you have to pay an annual subscription just to use that platform, or if you discontinued trading, there would be a certain amount of fee that would be charged and billed to you monthly. Now, NCM Investment, it's offering this platform MetaTrader 4. It's free of charge and it has the least amount of technical errors. Not only that, it even helps the traders not only with trading, but also to develop different strategies and different automated systems. Okay, but this is the topic for another day. Once you have the right training, right education, right strategy, and you have practiced enough, okay, what you need to do is only build discipline and have a focused mindset. Okay. So why should we? Why is it recommended to trade with NCM Investment? Maybe too early for this slide. That's not an issue. First of all, NCM Investment by itself, you know, it exists since 2009. It is a Kuwaiti company with global offices. We've got offices in Kuwait, UAE, Jordan, and Turkey. We have different kind of payment methods: KNET, credit card, and bank wire deposit. Okay. And the trading execution is amazing, and also there are flexible leverages starting from 1 to 100 until 1 to 400, depending on the type of trading account you apply for. Now the thing is, there are sometimes questions where the clients, okay, they ask why the leverage does not exceed above 1 to 400, 1 to 800, 1 to 1000. Now, offering maximum amount of leverage is generally offered by entities or financial brokerage services provider that are not fully regulated and they don't have the needed license to operate that business. And having maximum leverage, which is, let's say, you know, and dramatic leverage, exaggerated leverage like 1 to 800, 1 to 1000. The reason this kind of leverage is offered is because these brokerages that offer this leverage, they're slightly away, quite away from ethics. They want the traders to trade aggressively, to open more positions, to open more trades, so they can make maximum, they can milk maximum commissions or benefits out of their clients. Their objective is not to give a decent trading environment for their clients, but to make sure the clients, you know, they get harmed. So that's, I don't want to go more in depth with that. And also, you can start with the very minimum deposits and micro lots. What is micro lot? Now, let us say, you know, if we want to purchase gold, right, a gold bullion that is weighing 1 kg probably, it costs about 17,000 KD or 20,000 KD nowadays as per the current market prices. But what if someone cannot really purchase the whole 17,000 kilograms of gold, right? So what a person can do, there's a facility, you can be part of a share in that gold. Okay, instead of 1,000 grams, you could probably be a shareholder for 100 grams or 10 grams or 1 grams, depending on the gold investment service provider. Similarly, financial brokerages, they offer something called micro lots. What are micro lots? Usually a lot, one lot in the world of financial trading, it determines or defines what is the quantity of an asset. Okay, so let us assume if I was today interested in buying 1 lot of Tesla, depending on the trading terms and condition, 1 lot of Tesla, it would mean, you know, probably 1 lot means 100 shares, 10 shares. Again, each brokerage, they define differently. Now, if someone does not have enough funds or enough capital to buy the whole lot, okay, there's something more. You've got something called a mini lot and a micro lot. A mini lot is 10th of the share or 10th of the quantity that's being offered, and a micro lot is 100. I don't want to go into more details. I'm trying to keep it as much as simple as I can. Also, whenever you make a decision, there are many cases nowadays you would be witnessing, maybe on Facebook, on YouTube, people are giving different kind of reviews when they open a trading account of financial brokerages. They were treated, their positions were mistreated or closed, or the account got liquidated, or they requested a withdrawal and no withdrawal was ever received. So it is very important to select a financial brokerage service provider that is within the origin, okay, and it does have a regulated entity at the origin. So NCM Investment is regulated by CMA, which is the Capitals Market Authority of Kuwait. Not only that, they do have a physical location. Let's say if you require customer service or assistance and you feel it's not convenient to just contact by live chat or by telephone, a client can also visit the physical location, and the staff is always there to help out. Okay, and even the trading conditions that are offered are very flexible. The spreads are very low, flexible margins, and there are a variety of products, precious like we've defined before. And the customer service that's being offered from Monday to Thursday is 24/7, and from Monday to Thursday, and until 11 p.m. on Friday, being a weekend. Okay. Now, we finished with the theoretical part. Let's go a little bit more into complexity. Okay, how traders make decisions on Nasdaq. This is the most important part. Now, we have something called fundamental analysis. Traders, they follow fundamental analysis. And what is fundamental analysis exactly? It is nothing more than economical reports, geopolitical reports that discuss or share information with the people or traders, explaining how is the economy of that specific country where you're willing to invest doing. How is their unemployment rate? How are their housing reports? What was their gross domestic production? How is the performance of the country's imports and exports? So these are the informations, these are the reports that traders, they use just to understand what is the market sentiment to make trading decisions. The second part is the technical analysis. This is one of the most favorite part of the traders. Now you have to keep in mind there are two kind of traders. One is corporate traders, and when we talk about corporate traders in reality, the corporate traders are the investment banks, investment brokerages, central banks, state banks, private banks, because these are the people who are actually bringing the liquidity in the market, and it's into billions and trillions of dollars, right? That's this is the first category. Second kind of traders is the retail traders. Now the corporate traders, they have real-time access to the news information, and some news subscriptions for fundamental analysis, or they're really expensive and they're paid. They're not usually available for free. So the retail investor, what is a retail trader? It's a person who is an individual trader, probably trading from his home or from an office. So retail traders, they use something called technical analysis. And what is technical analysis? Whenever you refer to a chart, right? I'm just going to draw here on the presentation of it. You see these patterns, these movements going on up and down, Okay, there's a way to interpret these patterns, and we will discuss that today. All right. Now, the study of these patterns and price structures, this is what is called technical analysis, in easy words. So it's the study of price structures and price patterns. This is what technical analysis is. And we're going to discuss with you the three main important price structures and price patterns in the upcoming slide. Okay, so let's cover this slide a little bit more. Practicing certain strategies and money management rules. It's not only the trading strategy that's important in the trading life of a trader. It's also the money management rule. The money management rule, it's a section of trading education and training where the traders or trainees are taught how to manage their capital. Okay, so let's read from the slide first. Practicing certain strategies and money management rules. The simple and most basic trading strategies are drawing support and resistance levels. Okay, now financial trading usually It is, it is just like table tennis. It is just like table tennis. What do you have in table tennis? You have point A and point B. Often you have a ball, okay, this ball is supposed to go from point A to B and B to A and again from A to B and B to A, right? That's how it is. This area that you're seeing at the bottom from where the ball is always bouncing back, let us assume that this ball is actually the market price, okay? Since it's bouncing back from here, and the area where the price reverses towards the upside is actually called support. We're going to talk more about it, okay? An area at the top, the point B, where the ball reverses towards the downside, this is called resistance, okay? We're going to draw them on the chart, we're going to draw them on the platform, and I'm going to tell you more how to draw support and resistance levels on your trading charts and how it's used by the traders to make trading decisions. Okay, and another thing that is used is called moving averages. Now, moving averages, there are some tools, built-in tools that help in making the traders make decent, just filtering out their trading decisions, remove the noise, and interpret the chart in the maximum and most efficient way as possible. Okay, the famous moving average. Now, if you're taking notes, because I'm a fan of taking notes, right? If you're taking notes, okay, the well-known settings of the moving averages are 20, 30, 50, and 200. These are the most famous settings. Okay. Now we do offer intermediate and advanced course. We go through these technical indicators and strategies in more detail. Just a small tip: professional traders, they don't risk more than 2% of their capital. So let's proceed further. I want to get rid of the drawing tool. Okay, now let's talk about the trading patterns. Now, I hope you guys are still with me and following me with this all. It's an introductory session. It's more theoretical. It's just to create awareness. And at the end of slide, we're going to really talk about on the chart why Nasdaq is also one of the best alternatives for trading. So hope you're being patient. Now, there are 3 trading patterns that usually traders use for trading decisions. First pattern you see on the left-hand side, this is called the breaker pattern. Okay, you've got resistance. Okay, you've got resistance. What is the definition of resistance? It's an area where the buyers lose momentum. The reason why market usually goes up, it's not only because of the positive political and economical announcements, it's also the presence of the buyers, because at the end of the day, the markets, no matter if it's a financial securities market or a shopping market, it's always made of consumers, it's always made of buyers and sellers, right? So usually what you have here is when the price goes up, right, it's going up, it means the buyers are in control. Resistance is an area where the buyers should slow down or cash out or take their profits. This is what resistance is. Resistance is an area where buyers start losing momentum. And resistance, another definition you could take for resistance is it's an area or price zone where the value of an asset is really expensive. Okay, so let's say when the buyers are really strong, they had a lot of cans of Red Bull, they would push the market up, okay, and push the market up, and they would break through the resistance. This kind of trading pattern is called the breaker pattern because it breaks the high, it breaks that level where the markets are considered to be expensive. And usually when a trader is making a trading decision on the chart, little bit above the resistance, a trader would place decide to have probably a buy entry. This is how it's used if the trader is in a buying mode, if the market is in uptrend. Okay. Now let us suppose if a trader was busy with different stuff, maybe working, cooking, sleeping, whatever. Okay. Often when a resistance is broken, most often, not all the time, it turns into support. So what happens? The market, it never goes straight up. Let me see how can I change the color here. Okay, I've got it here. Okay. So here, the market, it doesn't go straight up. and it doesn't go straight down. The market, it always moves in symmetry. It has geometrical patterns. It always moves in symmetry. It always goes in zigzags. Okay, this is how the market actually moves. Now, so let's assume we had a resistance here, the price broke above it, and this entry was missed, and this would have been an entry. What would usually happen, because the market moves in symmetry, probably the market would retrace at the resistance that was broken, and that resistance is turned into support, and the trader would enter again from here to continue trending towards the upside. So the second pattern is called the wave or pullback pattern. Okay. Now the success ratio, statistically, the analysts usually say the breakout pattern is usually the success ratio is 75%. Again, this 75% is not return on the investment, it's the success ratio of this trading pattern. Okay, and the success ratio of a wave or pullback pattern is 85%. Okay. So now let's go to the third pattern. I hope this is clear. I hope this is clear. Maybe I'm being too fast, or if you're truly new to this, don't worry. We can cover this in upcoming sessions as well. Okay. The last thing, the last pattern that we're going to discuss. Okay. We're not going to go through these patterns here. Okay. We're not going to go through them today. All right. The last thing. The last thing, this is reversal pattern, a two-step pattern. It's also referred to a W pattern. What does that indicate? What does a W pattern indicate? The market is falling because of absence of the buyers. It's falling, it's going down, multiple reasons. Buyers are absent, buyers are weak, or short sellers are people, or short sellers are traders. If they're more in the market, they hold more influence, the market would start dropping. So probably there are more short sellers than buyers, and prices were way too expensive. Okay, so the price drops until it reaches to a level where the market decides that this level, it's more than enough, you know, it's quite cheap, it should go up. So the buyers would generally, they would jump in. Okay, and if you're familiar with the chart, around the support area, you would also see increase in green candles. The green candles would start increasing, and they would have decent size, they would be larger in size, indicating that they're trying to take control. So the market falls to the support level, short sellers in control, immediately the buyers jump in. Okay, they're trying to lift the prices up, but short sellers say no, let's continue towards the downside. Okay, let's give it one more shot, let's break that low. Okay, now you see this, it looks like a lightning bolt, right? Now this peak that you see, okay, it's called swing high, or it's called a neckline. It's called this level here, it's called the swing high or neckline. So a trader would wait for a W to form or see signs that a W is forming, and then a trader would have probably a buy stop order or a pending order, or you know, this is where a trader would enter a buy trade to benefit from the reversal pattern. Okay, so these are three main patterns. We've got the breaker pattern where the buyers are in control, they break through the resistance. Then we have something called a pullback pattern, wave pattern. It's a trend trading pattern. And then we've got something called a reversal pattern. Now, generally speaking, if you're someone who already have an existing experience, the trading patterns are used for entries, and they're only used most of the time or on very faster time frames, like 1 minute, 5 minutes, 15 minutes, 30 minutes, and a 1 hour chart. Okay, so that's the purpose of trading patterns. Now let's go to the next slide. In the next slide, we've got something called price structures. Okay, we've got price structures here. All right, now there are three primary price structures. There are more variations to it, but the most basic one is something called an up channel or a buy channel. Then the opposite of buy channel is something called a down channel or a bearish channel. And in the center we have a sideways trading range. I'll try to keep this very simple and brief as possible. Now when you see a market, now trading price structures are drawn by technical analysts and traders only to identify where the market direction is, only to just identify the trend in the market. That's what the purpose of trading price structures is. And generally, the time frames that are used for drawing the price structures are a 4-hour and a daily chart. Hardly a weekly chart, but 4-hour and daily chart are usually used by the traders to identify the trend direction, to draw these trend lines, to make these drawings. Okay, so let's give an idea how to identify if the market is an uptrend, if the buyers are really in control, and if the economy of the country has been doing well, or the financial performance of the company whose stocks you're interested to buy in is doing well. Here's the key. These are some key points. These are some key points. The market, first of all, it starts from a low, and probably at this low there was a support area. Okay, the market would make something called a high, and it would then pull back. You see this low here, and you've got a low here, right? The low that was formed here is higher than the previous low, so we name it higher low. Okay, now after it made a pullback, it made a retracement, it came down a bit. Okay, then the market jumped a little bit towards the upside, it made a new high, and this high is higher than the previous high. Now we have got something called a higher high. All right, so the high that was formed is higher than the previous one, and the low that was formed here is higher than the previous low. So when you usually have more than 2 higher highs and more than 2 higher lows, this is how the technical analysts and traders, they determine the market is an uptrend. Now the strategies are adjusted accordingly. If the market is really an uptrend, a trader would then switch from a bigger time frame. Let's suppose this is a daily time frame, and there's something a 4-hour time frame, right? Once they determine that, then they would switch to a short-term time frame like 1 hour or probably an M30. Okay, and whenever the price comes near these support levels, they would probably look for W, or when it comes at this high, they would look for a breakout. Okay, so we're gonna go, if it's confusing, we're gonna cover that. Like I said, just relax, take a chill pill. It's very introductory. The main objective of our presentation is just to create awareness, to show why Nasdaq is why it's a competitive trading product. Okay. Now, similarly, now the opposite of an up channel or a bear channel, okay, it is a the opposite of a buy channel, bull channel, it's the bear channel, it's the sell channel, and some also call it a down channel. Okay, what do we have in a down channel? A down channel indicates the trend of the market is towards the downside. Okay, there are not enough buyers, short sellers in control, no one interested in buying at all. People are more interested in selling, liquidating the asset or the asset class. So here what we have sharp moves down, we have aggressive red candles. There is an increase in the quantity of red candles versus the quantity of green candles. So what would usually happen is there would be a drop here, and there would be a low. It means if there's a high here, it means the market did reach to a resistance levels and it had a high. Since the buyers were no more there, buyers were not interested, short sellers took over, the price dropped towards the downside, it took a dip and formed a low. After forming a low, the market tried to slowly go back a little bit up, and it made a small high. It made a small high. We had a high before, but this high that has been formed, it is lower than the previous high. It is lower than this one. Okay, then the buyers try to take interest, but they really get exhausted out. This is what this pullback here means. The buyers really tried their best, but they couldn't make it, and the market drops again, and it makes a new low. So when this low, you have it here as your primary first low, and this secondary is your lower low. When you have more than 2 lower lows, and this is just a general practice, right? It's not really rule of the thumb kind of thing. When you have 2 lows confirmed and you have 2 lower highs, traders determine that the market is in downtrend and the sellers are in control. Okay, Then you have something called the box channel or a sideways channel. Some people call it a rectangle channel, box channel, and a parallelogram. What does this mean? How to interpret a box channel? Again, I'm going to repeat myself. You draw your trading patterns on major time frames like a 4-hour chart and daily chart, and their purpose is only to identify the trend. You do not use the price structures to trade. You use price patterns to trade and make entries. Okay. The box channel. Now there are two theories, and there's no right answer to that. Okay. The box channel, if you see, the higher highs are really not that clear. You have a higher high here, but the next high was equal to the previous high, and the market dropped. And even there are no constant lower lows. You know, it looks quite stable. Now the two theories that exist are, first thing, usually the traders, they define it as the market has reached a stability. The sellers and buyers have agreed to trade within one range. This is the first theory. The second theory is the buyers and sellers, they can't reach to a decision, they can't make a conclusion, they don't know what to do. That's why the price is stuck. Okay, and that's why you have this kind of price structure formation. And sometimes, usually you would witness this, it's because there may be the traders or institutional traders, they are not investing a lot, there's not enough liquidity, because maybe they are waiting for some political or financial news event. That's the reason sometimes market do slow down, and market only trend 25% of the time. Usually they're sideways. Okay, so these are our price structures. Okay, so let's move to the next slide. Okay, now very basic. This is how a moving average looks like on a chart. We're going to pull out the MetaTrader 4 platform, and I'm going to demonstrate in front of you. Okay, this is the most simplest trading method that is usually used by the traders. In the previous slides, I mentioned a technical indicator, which is a trading tool built in most of the trading platforms, and it's there available for free in the MetaTrader 4 platform. Okay, a moving average, actually, it's a trend trading indicator. What does that really mean? You see this pink line? At my times when we were learning technical analysis, they used to call it the magic line. Okay, this magic line, basically, it's actually calculating an average price of all the previous bars. We're not going to go into the science of this indicator. Basically, what traders usually do, moving average, if the prices are floating above the moving average, it means the market is an uptrend. In very easy and simplest way, if the prices are above the moving averages or above a single moving average and there are decent number of candles, green candles, it means the buyers are in control, the trend is towards the upside. And usually if you use a moving average, it does filter out the hassle of drawing the price structures and price patterns. So when you have when traders, they see a green candle closing above the technical indicator moving average, when the trader sees a green candle has closed above the moving average, this is an area where usually the traders would make buying decisions. Okay, now this is a mechanical strategy. By mechanical strategy, it means that there are set of predefined rules. It doesn't factor in the economical events, fundamental events at all. It's you have to just be like a robot, which is of course impossible, but that's how traders use the strategy. When you have a green candle closing above the moving average, it's usually an indication of buying the asset or a commodity. Okay, and the traders would generally hold this position or hold their trade until they see a red candle closing below the moving average, below this technical indicator, or if you want to call it just for today magic line, that's also totally fine. Now what's the benefit of this method? It's a strategy that helps you keep discipline and it helps you build focus. Okay, it's just a method. Okay, so let me just a little bit draw it for you. If it looks confusing, we're going to draw the moving averages here. Okay, let's assume that this is the moving average. Okay, now you see this is the price. If the price is really below the moving average, it means the market is it's in the downtrend. Okay, the buyers are weak. But once the market goes above the moving average, okay, and there's a green candle, success in the formation of a green candle, this usually is considered by traders a signal to buy, and this is where the traders would enter. And when it goes up, okay, it comes down below the moving average and there's a red candle, this is where the traders take this as an exit, sign of exit, exiting their position. Okay, so this is the most simplest form of explaining the moving average. Just a keynote, just a tip, a small tip. Now, moving averages, they help traders when the market is trending. When the market is in a strong trend, either it's towards the upside or towards the downside, you know, it helps a lot in, you know, it gives decent results. But if you have a moving average that is not trending, okay, if you have a moving average that is not trending, because you see, if you see here very closely, the moving average is pointing up. It has a deviation, it has an angle, you know, and this angle that is pointing towards the upside, it is showing the momentum towards the upward direction is really strong. But if you have a moving average that is totally flat, this is where it becomes a little bit difficult. Okay, this is where the markets, they become sideways, you know, the markets are not trending, and this is where you would face a lot of issues, a lot of false trading signals will be generated. Okay, so let's get rid of the drawings and let's continue. Okay, so now let's talk about practical demonstration. Now you will get an idea why we are really concentrating in this presentation on the Nasdaq trading instrument. I'm going to change my slide. Okay, switch to a browser. Okay, so this is the browser. Let's have a confirmation. Can everybody see this chart here? Can everybody see the Nasdaq chart? If you just raise your hand if you can see this Nasdaq chart here on TradingView. Okay, or open, this is a charting website. Okay, great, thank you so much, it was really helpful. Thanks for raising your hand. All right, great. Now look, I'm going to show you something really cool. If I switch to a daily chart, okay, if I switch to a daily chart and I really zoom out, okay, if I really zoom out, right, you would see that the Nasdaq markets, they have always been in an uptrend. They've always been an uptrend. This is one of the best parts of Nasdaq. Okay, now I'm not saying here that you should always buy. I'm not giving you any recommendation. I'm just sharing the chart and the analysis on the chart. And the chart speaks for itself. Okay, and Nasdaq, it has always been an uptrend. But what are these drops here? What are these drops? Right? So it does fall down. It does fall down. You see that? But what's the cool thing about this drop? You know, you can measure these drops. You can measure these drops. Okay, so here we have a measuring tool. This website is just nothing more than a charting platform. Okay, you can take this. Okay, let's, if I want to measure this drop, you see that this drop is only 12%. Okay, 12%. That's the drop size. Let's measure this drop. It is almost 8.7%. The drop before, almost 12%. If you really go into more depth and in detail analysis, if you're really gonna go, if you want to go back in history of almost 10 years or 8 years, you'd see an average drop does not really exceed more than 18%. So it's a decent trending market. It's always an uptrend. And here is somewhere, this is the area, you know, you can draw your trend lines. Here's an example, typical example of a bull channel. So the market is an uptrend. You've got a high, then you've got higher high, you've got a low, higher low, higher low, higher low. Okay, so that's the cool part of that Nasdaq, and that's not the only thing. Usually, whenever you're trading the forex products or even equities, right, an average daily movement is almost about 90 pips or 90 points or 75 points. That's the average movement in the day. If the markets are really volatile and there's a big news coming ahead, hardly you'd see a movement of 120 pips because this is the average movement. But what you have here, Nasdaq, the amazing thing about it is that it moves almost like 230 points, 180 points easily within a day. So traders, they really prefer trading Nasdaq because of many reasons. Now let's go to our efficient trading platform. This is our MT4 trading platform. And if you want to download it, all what you have to do is go to the website. Okay, go to our official website, visit there, go to a demo section. You can open a practice account free of charge, and you can download it, get your username and password, download the platform. And when you download the platform, you would see something called a market panel. You access the market panel from this icon here. And from there, just go to NQ and right click and click on the chart, and the chart will pop up. You hide this market panel like this. Okay. Now you see here, if you see these vertical lines, this is a Nasdaq chart. If you see these vertical lines, I'm going to switch to 1 hour chart here. Okay. These vertical lines, they represent 1 day. They represent 1 day. I can use a crosshair here, okay, and let's say I take low, the low of yesterday. I'm going to left click on the mouse, hold it, and stretch it towards the upside. You can see here we have almost a 240 points move. Ignore the last 2 digits. It's a 240 points move, whereas in trading other products, forex and other stuff, you would hardly see a 240 points move happening on daily basis. Not only that, let's see here, okay, almost 220 points. Almost, when you have a drop, it's a 320 point drop. And if I really zoom out, you see that whenever you have a drop, it always pushes up. Whenever you have a drop, it always pushes up. Whenever you have a drop, it always pushes up. Okay, so this is just showing you the Nasdaq chart in more detail. Now, I guess that's it. This is I wanted to. These are the. This is why it's the traders' most loved index trading instrument. You know, because of the volatility, the trend is stable. The trend is towards the upside. The movements are strong. You have an average movement of more than 200 points. You know, forex is also one of the amazing trading products, right? It's for usually traded by people who want to be a little bit relaxed and comfortable in the trading, but it's Nasdaq is a trading product which requires attention and action. But if you want to know more in depth, you know how to read these candles, how to read these charts, what's this support resistance, you know, this is a support area here. Okay, this is the support area because the price always has been bouncing from here. This is the resistance, and then there was a support in the past. You know, how to draw these levels, what do these levels mean, what are these price structures, what are these price patterns, how to apply them practically, how to use this technical indicator, that CCI thing. You know, we have an upcoming course that's also available, and it will be a more detailed course, and we'll cover all in that. Let's move back to the PowerPoint. Okay. Now we're going to end the session. We're going to end this session. Okay. So basically, this was just an introductory course introducing to the Nasdaq markets. They move really fast and amazing alternative to Forex and the precious metals markets. We have an upcoming course. We're going to talk more in details how to use technical indicators, which indicator should be used when, what is MACD, what is RSI, how to apply only breaker patterns, how to choose a trading style. All of this is going to be discussed in the upcoming session. It's going to be an advanced trading sessions. More sessions related to only Nasdaq trading are also coming. Now, if you're interested to know more about trading Nasdaq on demo account, or to how to learn additional trading skills, related to Nasdaq trading, okay, there's a very, very simple requirement. All what is required is just to have a live account with NCM Investment. Okay, that makes you eligible to apply for the advanced course. Our customer service is available 24/7 from Monday to Thursday. Friday we're available until 11 p.m. Our customer service is also available online. Even you can see the email addresses. You can contact on these email addresses to know more about the upcoming training programs that we're going to be offering and our trading products and services. The address is in Sharq. We are in Dar al-Awadi Tower, mezzanine floor. If you need any assistance, you can even call directly on 225-3888. And if you'd like to meet in person, I'll be more than obliged. Have a great week ahead. And this video is being recorded and it will also be emailed to you once it's processed. Thank you so much for your time and have a great evening, and bye-bye for now. We're done. I forgot to ask if you have questions. You're welcome to answer. Sorry. My apologies. My sincere apologies. The webinar is officially, we're done. We've covered all the topics. But if you've got questions, please feel free to write them in questions box. Okay. Sure. Please. You can ask questions. Post your questions in the questions section. And I really welcome questions, and I'm happy to answer them for you. Do we have any questions here? Okay, please go ahead. Okay, where is the office? Our office is in Kuwait City, Sharq, in Dar al-Awadi Tower on the mezzanine floor. All right, a gentleman is asking a question about the Tesla stock. All right, if you're already an existing customer with NCM Investment, what you could do is you can contact your account manager and submit a request to your account manager. All right. Okay, no more questions. I hope you enjoyed the session and we'll be hosting more stuff. Thank you so much for watching and have a great evening ahead. Good night wherever you're watching this webinar from, and bye-bye.